and welcome to this session of our course on Financial Institutions and Markets. I am Dr. Sonam Bhadoria, Assistant Professor at Swami Rama Himalayan University. In today's lecture, we will dive into a topic that has fundamentally transformed the way of investors participate in the securities market, the dematerialization process and the investor accounts. This subject is not just important in theory, but is also highly relevant in today's digital and technology-driven financial environment. Whether you are a student, a retail investor, or a financial professional, understanding of how securities are held, traded, and settled in electronic form is essential to navigating the capital markets confidently. So let's begin with understanding what dematerialization really means. As we discussed before, the term dematerialization, often abbreviated as DMAT, refers to the process of converting physical share certificates and other financial securities into an electronic or digital form. In other words, instead of holding paper certificates to prove ownership of stocks or bonds, investors now hold them electronically in a special type of account which is known as Demat account. This digital transformation has eliminated the need for bulky paperwork, the risk of losing or damaging certificates, and the time-consuming processes that were previously required for transferring securities. Now, what is the need of this type of instrument is required? So, why was dematerialized introduced? Before Demat, investors faced several issues with physical certificates. They could be stolen, forged, or lost. There were frequent errors in matching signature during transfers. The entire process of buying and selling shares took a long time, sometimes several weeks also. Corporate actions such as dividend, bonus issues, and right offers had to be manually tracked and often led to administrative delays and errors. Recognizing these inefficiencies, the Indian government and the capital market regulator SEBI took steps in the 1990s to establish a paperless trading system. This led to the establishment of depositories and the introduction of the dematerialized system in the year 1996. Now, let's understand how dematerialization actually works. So, to begin with the process, an investor needs to open a Demat account, which is somewhat similar to a bank account, except that it holds securities instead of money. The account must be opened with a depository participant, which acts as an intermediary between the investor and the central body. In India, there are two authorized depositories, NSDL and CDSL. NSDL basically the National Security Depository Limited and CDSL is the Central Depository Services Limited. Both are regulated by SEBI and maintain records of ownership of securities in electronic form. Once the Demat account is opened, the investor can initiate the dematerialization of physical certificates. This is done by submitting a dematerialization request form, in short it is known as DRF, also with the original share certificates to the depository participant. Then the depository participant forwards the request to the concerned depository, which in turn coordinates with the issuer company's registrar. After successful verification, the physical certificates are destroyed and an equivalent number of securities are credited to the investor's Demat account. This process usually takes 15 to 30 days. Now, let's move on what the next part of the discussion, which is investor accounts. In order to participate fully in the capital market, an investor typically operates two key types of accounts. The first one is the Demat account. This account holds all your financial securities such as equity shares, bonds, debentures, mutual fund units, government securities, and exchange traded funds in electronic format. Each Demat account is assigned a unique identification number, which is known as the Beneficial Owner Identification Number or BOID. This helps in identifying and tracking the securities held by each of the investor. Then the second is the trading account. This account is used to execute buy and sell transactions in the market. When you purchase a security, it is credited to your Demat account, and when you sell it, it is debited from the same account back. The trading account is usually opened with the registered stockbroker, who is basically the member of a recognized stock exchange like the Bombay Stock Exchange, or it may be the National Stock Exchange of India. Both these accounts are often linked to the investor's bank account also, which is used to handle the cash flow related to these transactions. Now, let's talk about what are the benefits of this process, or we can say what are the benefits of dematerialization, especially from the perspective of an investor. So, the most important is the elimination of physical risk. No more worries about loss, theft, forgery or multiplication of physical certificates. Second is faster and more efficient. Transactions are now buying, selling and transferring securities is now instantaneous or settled within T+1 or 2+ days. Reduced cost. No stamp duty is required for transfer of securities held in Demat form. Corporate actions means they are made easy. Dividends, interest, bonus shares and right issue are directly credited to your account. No paperwork involved here. Now the portfolio management is little bit more convenient. You can view and manage your entire investment portfolio online on real-time basis. Loan facility is also available here. The securities held in the Demat account can be placed as collateral to secure loans. And most important, environmentally friendly. The Demat system eliminates the need for paper-based certificates, contributing to greener practices. Now, let's take a moment to understand the reverse process, which is known as rematerialization. While rarely used, rematerialization allows investors to convert their electronic holdings back into physical form. This may be done in specific circumstances or by choice by submitting a rematerialization request form, which is known as RRF, to the depository participant. However, in today's digital first ecosystem, almost all trading and investing is done in Demat mode. Let me give you a simple example to illustrate how this works. Suppose you inherit 200 physical share certificates of a company. To be able to sell them on the stock exchange, you must first dematerialize them. You approach a depository participant, say a bank or a broker, and open a Demat account. You submit the dematerialization request form along with the share certificates. Within a few weeks, the shares are credited to Demat account. Now, you can log into your trading platform, sell those shares on the exchange, and the proceeds will be deposited into your linked bank account. The entire process is seamless, transparent, and safe. Now, let's discuss who are the regulatory bodies who control this process. So, let's talk about the regulatory framework. In India, dematerialization and related services are governed by the Depositories Act 1996 and regulations framed by SEBI only. SEBI has made it mandatory for all initial public offerings and right issues to be Demat form only. Also, the transfers of securities listed on stock exchanges can be made only in dematerialized form. This regulatory approach has not only increased investor confidence but also helped in expanding the investor base in India's capital markets, especially among retail and the first-time investors. An important development is the emergence of online investment platforms, mobile apps, and eKYC norms, which have further simplified the account opening process. Today, with just a few documents and an Aadhaar-based e-verification, anyone can open a Demat and trading account within a few of hours. So, to summarize the session, let's quickly revisit what we have learned today. Dematerialization is the process of converting physical securities into electronic form. Now, the investors need a Demat account to hold securities and a trading account to buy and sell them. The Demat system is operated through depository participants connected to either NSDL or CSDL. Dematerialization has brought efficiency, safety, cost savings, and environmental benefits. SEBI and other regulators have ensured that this system is secure and investor friendly. As we conclude this session, I would like you to reflect on few questions like how has dematerialization improved transparency and efficiency in the Indian securities market? You have to think what are the key responsibilities of investors when operating Demat accounts and trading accounts. And finally, how can financial literacy be further improved to enable more citizens to benefit from this system? Thank you for joining me in this session. For the next session, we will talk about the bonds. Then, thank you. Namaste.